I'm Ryan Lightfoot-Brown of FundCalibre. We're joined today by Chris Garsten, manager of the Waverton European Capital Growth Fund. Thanks for joining us, Chris.
Thank you.
Now, you used to run a Netherlands fund, which is quite unique. How did that come about, and why are you now running a more European fund?
Well, that was when I was at Credit Suisse, and the Swiss banks were slightly unusual in that both Credit Suisse and UBS both had a number of country funds, France, Germany, Holland, and so on and so forth, to reflect their very wide European client base.
And you've managed this fund since 2001 with your co-manager, Charles.
Yes.
In that time, we've seen an awful lot happen in Europe. We've seen it come together as sort of one area in terms of the euro. We've seen it start to fragment since, especially from a UK point of view. What have been the sort of the big impacts in terms of investment opportunities?
The overriding sentiment over the last 20 years amongst the British for investing in Europe has been very negative. So for the first 6-7 years, the view was that Germany was finished as a manufacturing location. And then the view was that the euro was finished. How on earth could you marry Germany and Greece? And now the latest negative view is that the European economy is going to slow down. But over that period, in the Capital Growth Fund, you made more money in dollar terms in our fund than you would have done in the S&P 500.
And we had the European elections last week. Has that impacted your view on European equities at all?
The very blunt answer is no. There's always a lot of noise to Europe, as I've just mentioned, but we're looking for companies that are going to make us a lot of money and not at the politics.
On the subject of politics, Trump has been on the minds of investors over the last couple of years. It looks like he might start turning his attentions towards Europe and putting tariffs on things there, such as the auto manufacturers. Is that an element that's of concern to you at all?
Yes, that's absolutely correct. I mean, it is an issue in our minds. But what we can't help thinking of is that about 5 years ago, the Americans got very upset that over half their auto tyres were imports from China, and so they put on a very hefty levy in the hope that they would then resource production back to the US. And all that's happened is they've shifted the production from China to other Asian countries, and so now they're still importing more than half their auto tyres, but just from Asia ex-China. And the end of the day is America is only going to get its manufacturing back through producing goods that people want to buy. And very often European companies, whenever we've spoken to them, asking them whether they're a threat, they all say, we're all in the same boat because none of us are producing in America. So it's going to be interesting. But yes, it is something we're monitoring very closely.
Going back to the funds, you've got a one-in, one-out philosophy. You recently sold a salmon farming company called Maui, and but in your fund note it says that you sold this because of a sea lice issue. That sounds quite interesting that that's affecting the price of salmon. Can you just talk to us about that a bit more?
Well, to give you a tiny bit of background, we call ourselves capital cycle investors. And by that, very often we think most people focus on demand. And they look at Chinese growth and demand, whereas we look at supply. And what's interesting about the salmon industry was that there was a reduction in farmed salmon supply because of the sea lice. And it's been a fantastic investment for the last 5 years because farmers simply could not increase production, although the prices of salmon doubled and their profits exploded. But capitalism being capitalism, what is now happening is that these very high returns are now bringing in new supply, and that means that having had 2 companies in the fund for a long time, we've now got nothing, because we think prices and returns are on the cusp of a collapse.
Okay, and in exchange you bought a company called Navigator. What do they do?
They do paper, and literally the A4 paper that we have in our office, and you think, well, my goodness, that's a boring industry. But what's happened is that they've got the lowest cost of any European company, And because other companies have higher cost bases, they are exiting the market. So it's another example of us looking at supply and not just demand, because what's happening is supply is falling faster than the rather flat demand outlook.
Well, Chris, that's been really interesting. Thank you very much for joining us.
Thank you.
And for more information on the Waverton European Capital Growth Funds, please visit FundCalibre.com.